Hey guys, welcome back to another video by Fully Informed Trade, or Fitrade for short, knowledge for everyone. My name is Alex Cho, and today I'm just going to go ahead and review some stocks, talk about this global stock market, talk about some stock indexes, review the bond market, go over the crude oil, and of course review the most important currency pairs as well, along with the dollar. So let's go ahead and get into all of it. First, let's start by reviewing the Dow Jones Industrial Average. It seems to have closed right above the 20-day moving average. However, we are seeing some negative markets out of China. I don't know exactly what we're going to see coming out of Europe. Probably a negative reaction. Again, Premier Wen Jiabao, basically the president of China, if you could call him a president. I'd call him an imperial emperor or whatever. You know, Wen Jiabao basically says that judging by the amount of inflation we're getting and the amount of growth we're getting, growth is still in the double digits. Analysts didn't like it. Analysts were hoping for only one more credit, basically interest rate hike. But it seems like the Chinese government will have to do it much more, because Wen Jiabao basically says that we're going to do just about everything we possibly can to make sure China's inflation doesn't get out of hand. And remember, when you see a lot of lending, that creates a lot of money. And when you create a lot of money put into circulation, that's not just good for China, it's good for global growth as well. Because China is also a big importer of goods, and if you have a lot of inflation coming in, that means that China will pay much more for those goods coming in. And along with it, China does have a lot of foreign investments as well. Of course, we'll go over that in a little bit more detail and in a different aspect, of course, later on in this video. But again, Dow Jones Industrial Average not having a good time, and Chinese stocks did take a hit based on what we're seeing with inflation coming out of China. Now let's go ahead and review the next chart, which is QQ360. Chinese indexes were down by around 5%, and remember, on the basically on today's trading session, which was basically the Thursday trading session, so April 14th Thursday trading session, you know, the stock closed up around plus 13%. Chinese stocks are negative 0.5% already, and I'm pretty sure the Chinese market is going to close any minute now. But again, you're seeing a double topping pattern right here. It's probably going to hit that trend line right there. It has already gone up by around 14%. It has fallen by around 33% off of its highs, and pretty much I don't see this value very reasonable. And the main reason why I don't see it very reasonable is that who in the world would pay $3 billion? Okay, so this company's market capitalization or market value is $3 billion, even though it would probably take around 10 years for this stock to make earnings even somewhere or anywhere near equivalent of its U.S. counterpart, which is basically Semantic Systems, in which, in that case, Semantic Systems, which is basically the purveyor and producer, of Norton Security. And if you don't know what Norton is, just go watch The Apprentice. You see these group of celebrities go ahead and promote the product, or just look it up online. But it's basically an antivirus suite that protects your computer from viruses, hackers. Again, QQ does the same exact thing. It provides it for free. They plan on making revenue from value-added services. Norton doesn't do any of that junk. They just sell the product and say, hey, we're not doing anything for free. We're selling this, and we're selling it for a subscription. QQ is not taking that approach. Therefore, I find it very hard for myself to believe that QQ360 will be able to make net income or revenues anywhere near as close as Norton in the next over the next 10 years. So again, these prices are a bit over the top. I think that the market capitalization should be somewhere anywhere from 1 to 1.5 billion, based on the risk we have on hand, and of course foreign competition that could enter in to QQ360's technology. Because again, viruses are just viruses. You know, it's just code. And as far as I'm concerned, Norton could just go into the Chinese marketplace and just convert Norton's language from English into Chinese, and just repackage it and resell it. And again, that would cause some damage to margins on QQ360. Last time I checked, Windows XP, Windows 7 is the same whether it's in China, Japan, Korea, United States, South America, and Europe. So again, if you're making antiviral software it doesn't really matter because computer technology is relatively standardized wherever it is. So again, there isn't that much of a moat surrounding QQ360, aside from the fact that QQ360 does understand its market very well. I see plenty of antiviral protection suits all over the world. You see, there's tons of great products out there, and again, I find it very easy for them to eventually compete in China, advertise, and eventually gain market share, and basically push out QQ360 from being the top dog. QQ360 is pulling it off by just making a free antiviral software, but that's not very profitable over the long run. Therefore, I'm not that positive on it, and I do think that over the long run it could go lower, but in the immediate future, tomorrow's session, trading session on Friday, I think this stock would most likely gap lower and continue trading lower throughout the day. Next, I want to go ahead and review the dollar index. US dollar index, relatively flat. It has been that way for, I guess, all of April 15th. I would like it to, I honestly think that if it broke this trend line, which I believe it already has for the most part, you know, this could be kind of positive for stocks, but we're having mixed signals. We're having Asians, but again, you know what? I think that, judging by what I'm seeing, I think Chinese depository receipts, like what you saw on QQ360, will have a major pullback after having such a good day. Again, Friday is a day where a lot of people cover. When you cover your shorts, that pretty much means that you basically, no, not cover your shorts, but when you sell your long positions, that's going to push the value of the stocks down. As for the Dow Jones Industrial Average, since it's a Friday and people have been shorting the Dow Jones Composite or the Dow Jones Index for I guess the last 5 days, you're going to see some covering tomorrow. On top of that, you're seeing some dollar index weakness. So again, I do think this 20-day moving average will hold. We could probably retest 12,600, although I don't really. I really wouldn't. Honestly, I'm not really expecting it, but we could. And that's pretty much what the Bollinger Bands are telling us. We possibly could, but again, I'm not really hoping for that. I'm not really expecting it, and I really don't want to. I really don't want to anticipate it. What I do anticipate is a bounce tomorrow, a small bounce, probably around anywhere from 0.5%. And as far as the stocks making somewhat of a comeback, you'll probably see it. You'll probably retest 12,400 again, and maybe make some small gains into 12,500. But I think that's probably the most you're gonna get. Now, moving on, I want to go ahead and talk about the Euro US dollar. Euro US dollar is having some trouble breaking this area of support. If you guys look at the daily chart, you guys will notice that the Euro US dollar is in somewhat of an intraday downtrend. I'm going to make intraday a daily chart downtrend. Of course, it's really short term. I don't really anticipate much to come of it, but you know, what's really making the dollar weaken right now is basically the U.S. dollar, Chinese renminbi, yuan, and the basic thing around the yuan here, or yuan, is that yuan is basically strengthening against the U.S. dollar, and this goes back to what the premier, aka I guess Emperor of China, I guess, Wen Jiabao, it basically says he's going to do whatever it takes to curb inflation, and one way you could do that is to basically cause the Chinese renminbi yuan to go back up in value in the currency or foreign exchanges. Next, I also want to point out that crude oil futures are taking a hit, so possibly, you know, you could possibly see a bounce in crude oil as long as the dollar index does continue going lower. I'm going to go ahead and pull up the dollar index chart. Yeah, dollar index continues going lower after the break of this trend line. And of course, you see the dollar, I don't think the dollar index probably will retest the 74.65 tomorrow, but chances are it might not break it. But if it does, you'll probably see commodities and stocks have a really good day. If not, if it just touches it, you'll probably see a 0.5% gain across the board, including basic commodities like crude oil. Now let's go ahead and move on to the next chart, which is going to be Treasury bonds. And again, Treasury bonds are having a pretty positive week, but I think that Treasury bonds will be sold before the weekend. People are going to take their profits off the table. But not only that, you're seeing some weakness in the dollar index. Therefore, a weakness in the dollar index means weakness for the treasury bond market, along with strength in stocks means weakness for bonds. And of course, there's going to be profit taking as well. So a lot of reasons why I would avoid buying treasury bonds tomorrow, but I wouldn't necessarily short them either. Next, S&P 500 volatility index short term. I think the volatility index will just go lower, and I think it will honestly break this $28 level. I've cited this as a support level many times. It has touched it again today. A small little bounce scalp right there. But again, I think that it could break $28, and I'm actually anticipating it to break $28 on tomorrow's trading session, as a lot of profit taking will be done. A lot of shorts will cover, and when shorts cover, that means indexes will go up, and when indexes go up, plus you're finding indexes have support at the 20-day moving average. So again, a lot of reasons why you actually don't want to be buying the volatility index tomorrow. And if you're already holding on to short positions, I'd still hold on to them. Anyway, that does it for me for today. If you guys want to use the same charting software, you just check out the link right below. If you guys want to keep on watching these videos, I will have more for you guys in the coming weeks and months ahead. So be sure to subscribe, as it probably will help you out over the long term. Anyway, take care, folks, and I will see you guys next time.